So what's your gut feeling on what's ongoing in China right here? It seems very tricky to gauge as far as I am able to assess it from the outside. But what's your take?
I think I share with you
Uh,
the let's say the uncertainty
uh,
about exactly what's going on. I think when I look at most of the data and most of the market action, it looks like not much has changed. Like, I don't know, the PMIs are basically flat. Like trade, was a lot weaker last year and, is kind of neutral this year in terms of the numbers that we're seeing. Um, the commodities that have the most China sensitivity, things like steel and iron ore, are basically plunging to post-COVID lows and lows of almost the last 10 years. So you sort of add that all up, and I should say also Chinese bond yields continue to fall meaningfully. If you look at that sort of constellation of things, you'd sort of say this doesn't really look like much is going on, combined with the fact that the equity market after that pop from the national team
mm,
buying has mostly been flat, right, over the course of the last couple of weeks. So all of those things, when you read the tea leaves, look like nothing's really happening. Nothing's really changing, and you're not really getting China getting geared up in the commodity demand. And then, of course, you look at copper, and it's surging through the roof, and you're like, okay, two totally different stories that are going on there. Now, maybe those idiosyncratic things, we were talking about a little bit of that
mm.
in terms of the idiosyncratic things on copper. But that's copper, I think, is more the outlier than it is consistent with lots of the other data points, at least I'm seeing in China.
Mm. I would tend to agree with that. But it's very, very tricky to figure it out on a running basis, also given the lack of transparency from the Chinese authorities. But final question I have for you relates to Japan. They obviously moved the needle on the front end of the yield curve. And I guess it was the talk of the town a couple of weeks, but nothing major happened, right? I mean, where does the Japanese outlook leave us from here in a global fixed income context? I mean, is it meaningful what is happening out there?
I mean, I think the BOJ, it's been, I've been following the BOJ for, 20 years. And I think, their interest rate policy has been essentially zero for 20 years. And tiny tweaks like what happened with the most recent announcement, while it sort of like makes good Twitter clickbait headlines of they're out of zero, negative interest rates, like it has essentially no functional impact on markets or the economy. I mean, basically, what's happening in Japan is, money is very easy. The economy, inflationary pressures are very contained. Most inflation that's occurring, basically all of it, is from imported inflation on that, and the economy is, puttering along. It's fine. It's not great, and so that's a sort of set of conditions that would require continued easy monetary policy. There's no reason to tighten rapidly, and that's in the context of, particularly in the U.S. situation where, the overall set of conditions are strong, and for economic conditions, inflation is starting to tick up, and if anything, pushing to tighter than expected monetary policy. And so I think that divergence there, it's not really going to be driven by what's going on in Japan. Nothing is going to happen meaningful. It's going to happen in Japan, as far as the eye can see. And so really, like if you're trading the currency, let's say, it's mostly going to be a function of what goes on with US monetary policy and dynamics, much more so than it is whatever the BOJ is going to do.